actually, it's been quite a nice place to have a simple system because that hasn't absorbed and had some of this contagion into it. So we have had the luxury of sitting and watching that. For us, the key issue in all of this is what happens to to international commercial paper markets. And we are all watching at the minute how both the European and American markets behave and how they open up over the next couple of months. That is quite a key area. But on the New Zealand scene, no, it's reasonably calm.
Are you then saying that your confidence is that our banking system is stable and will be reliable, but you're not quite so confident about some international events?
Well, it won't have escaped your attention that there is intense financial market turmoil going on overseas.
Well, I think the question was, to what extent are you confident that will resolve itself or not?
It's important for us that the commercial paper markets open up internationally, and that's the key thing that we will be watching. Assuming that happens, then yes, we are confident.
Is there a time span around that?
Oh, well, I mean, one wants to see it within months rather than years, but there's no particular drop-dead date or anything. And, of course, we do now have a situation where many of the New Zealand banks, most, in fact, of the New Zealand banks, are coming in and putting residential mortgage-backed securities with us, which allows liquidity to get into the system in quite large amounts if needed. So that just keeps it going. Go on, Rob.
Yeah, I got an email the other day from someone who said, look, I've been putting all my money in the bank, I've saved money like I've been advised to do, and now they're cutting the interest rate I'm getting on those deposits. I was wondering what your response would be to that.
Yeah. Yes, that happens. That's how market economies go, and they've got to think about those things.
I guess just broadening that out a little bit, it was a comment made, I think, in The Economist, that what is happening internationally is we're seeing a transference of the costs of this from savers onto, from borrowers onto savers, in effect, with the lower interest rates.
Yeah, well, absolutely. Perhaps they don't make enough noise in support of the Reserve Bank's monetary policy when interest rates are high. We don't hear from them then. But absolutely, higher interest rates help a lot of people, help the savers. In relative terms, when rates fall, they're relatively disadvantaged. But the fact is, in New Zealand, they're still getting rates that are still quite high in nominal terms by international standards. They should go to Japan for a little while and see if that's any better.
Should we expect any significant changes to the policy targets agreement that might come out of any discussions between yourself and the new Minister of Finance?
Well, I mean, there's two sides to the policy targets agreement. We're not looking for anything particular. You'll need to talk to the Minister, but there's nothing of urgency that I'm aware of there. At some stage, he may well want to re-sign it, get a signature on it. But at the minute, it's business as usual.
Is there a time frame for a new agreement? Because often there is a new one.
No, the Act says when there's a new governor, there needs to be a new agreement. It's open beyond that at any time. The two parties can renegotiate it.
Dr. Ballard, could I just clarify, you seem to be implying that the recession that started at the beginning of this year is going to run for about 18 months or so, mid-2009. How bad is that likely to be in terms of unemployment rates, falling house prices and so on?
Yeah, we wouldn't put it quite in those terms. We're a little bit more optimistic. Actually, if you want to be sort of technical about it, we believe the recession has ended. And we have positive but very low growth for the next 4 quarters. And it's only towards the second half of next year that one can be sure that we're getting very solid growth. But those numbers, as you know, in New Zealand can jump around. Actually, historically, they tend to improve rather than getting worse. So you may find that in another couple of years, Statistics New Zealand says we didn't have a recession. That would be quite within the bounds of statistical probability. But in the meantime, we think we've had a very shallow recession. And actually, it's not that different from the from Australia, the lucky country that's just had a third quarter of 0.1%. Statistically, it's not really very much difference between those. But we are a little different, as I said, because we had the drought and we had the housing sector coming off a little early. And that's meant we're in a bit of a different position from other OECD countries, which look like Q3, Q4, Q1 next year are their negative quarters. That sort of helps slightly, but I wouldn't put too much on that. Those are just very low numbers. But that is a recession technically, but a very, very shallow one, and a lot shallower than we've seen in the past. Yet to see whether that actually comes true.
So just in terms of the second half of that question, in terms of unemployment rates and housing price falls and so on.
We see unemployment going up to 6%. Well, that's disappointing, but it's actually not high unemployment by our historical measures. And if you go back, in some respects, what we're seeing now looks a little more like 1980, 81, 82, both in New Zealand and internationally. That was quite a downturn, much higher unemployment at that sort of time. We will watch the labour market carefully, but currently our forecast sees an unemployment growth, but not a massive one.
Have you changed your view at all on house prices in the last... since the last MPS?
Not really. We slightly more pessimistic, but only very slightly at the margin. We're seeing a house price contraction where house prices dropped 16% in nominal terms from their peak, and we're halfway through that now. The rest of it happens in the first half of next year. We base that on quite a bit of forward indicators in the housing market that makes that more predictable in some of these areas. So far that's behaving as we would expect. Again, that's not assured, but that's quite an important part of our prediction because it helps underpin some growth in consumption next year.
The rate cuts at present and all the other stimulus measures from the government, tax cuts and so on, I mean, how do you see the retail sector going in the next year? I think we've got a retail sector that continues at quite low rates, so it's not necessarily going to be a great Christmas for anybody, but we don't see major contraction. Is that right?
Yeah, the additional factor of the lower oil prices has helped disposable incomes, but through until the middle of next year, there's very little growth in consumer spending, but we do see some growth returning from the middle of next year.
Thank you, ladies and gentlemen. If there's no more questions, it's the end of the conference, and can I thank you for your support and interest during the year. Have a happy Christmas, and I hope we all have a 2009 that's one heap better than 2008. Thank you.